heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Apple iPhone confidence, but regulatory risks. Details ahead.
Plus, Businessweek's definitive story on Rivian's EV turnaround plan.
And a look at Neuralink and its competitors as Musk tees up a new implant. But first, let's check in on the broader tech index right now. Ed, I'm afraid that soothing of concerns around inflation has not driven up the tech stocks. Bond markets, yes, they are on fire, but today the Nasdaq is off by 1.2%. Some key players on the downside, Nvidia being one. But you're looking at other key names that are currently under pressure.
Yeah, Apple. And Apple is a big points drag. There are so many headlines out. In the first instance, with the stock at one point in the session, on track for its biggest drop since March, Bank of America up, raising its price target to $256 a share from $230, seeing confidence in a refresh cycle for the iPhone. Then there's the Bloomberg reporting that Apple has said to its suppliers, we want to boost iPhone shipments by 10%. There's some growing momentum around the iPhone story, up 18% or so year to date, but by no means one of the best performers on the Nasdaq 100. And then there's that bit you talked about, regulatory risk. Apple avoiding sanctions in the EU? Give me the details.
Yeah, I really think, though, at the moment, we are seeing this Apple concern at the moment and the fact that EU regulators are basically forcing them to open up the wallet situation. The fact that we're seeing fintech being eyes on the prize, maybe a boost to PayPal. But ultimately, this is the way in which EU regulators have decided that big tech needs to stop opening up their walled gardens. And Anurag Rana is exactly the person we should speak to about this Bloomberg Intelligence. And just dissect for us, Apple under pressure, big tech more broadly on the day. But as Ed articulates, there's some good mood music around iPhone supply and demand. But at the same time, there are these regulatory risks that are forcing business model change.
Yeah, Apple's performed really well over the last few months. And, if you go back in April, I think it's up, 35–40% since then. It's, the rebound has been driven a lot by Apple's AI story, which I think has resonated well with investors. Now, yesterday was probably the first big time news we got in terms of iPhone shipment improvement. And I don't remember in the last several years really looking at that kind of a news. And I think that really says that there is a lot of you could say hype/expectations about the iPhone 16 and what it could do to Apple's top line.
Anurag, the other big story is that Apple has avoided a fine from the EU because it's opened up its mobile wallet technology to others. It's made a concession. How do you think that impacts the iOS ecosystem?
Yeah, Apple's CFO commented a few quarters ago that the App Store revenue from EU, accounts for about 7% of that particular area's sales. So it's really not that big of a deal, frankly. Now, this is nothing new. We are seeing EU really cracking down on all big US firms. I don't think it's going to stop anytime soon. I don't think these cases are going to go away. But frankly speaking, from a financial point of view, it's not going to hurt them as much as, the headlines suggest.
Anurag Rana of Bloomberg Intelligence, thank you very much. I mentioned there were many headlines about Apple. Apple and Microsoft have dropped plans to take board roles at OpenAI in a surprise decision amid growing regulatory scrutiny. Here in San Francisco, Bloomberg Technology Senior Executive Editor Tom Giles. Give us the details of this Bloomberg reporting. Microsoft's investment in OpenAI is well known. But Apple was due to get a board observer role. Now neither of those are going to have a board observer role.
Yeah. Ed, OpenAI's board was starting to get really crowded with big, powerful tech companies, the most powerful tech companies in the world. That's a bad look when you are under regulatory scrutiny, when everybody is worried about a concentration of power and money around OpenAI, basically one of the biggest, if not the biggest LLM, biggest generative AI companies, was just getting too chummy with Microsoft and Apple. That was the concern.
A concern that actually is global, Tom. We were just talking how the EU has been focused in on Apple. They were focused in on Microsoft sort of ultimately doing a form of M&A here by stealth. Now, without the board seats, does that drive home that that isn't the case?
So Microsoft is the biggest investor in OpenAI to the tune of $13 billion. It's a massive investment. Microsoft is weaving OpenAI's technology into a lot of its own products. Apple is doing the very same thing. It's not an investor to that degree, but it is using OpenAI's technology throughout its software to make it basically to get people to spend more time on their iPhone, to make the iPhone more useful. Both of these things are basically showing how important OpenAI is and how important the relationship is with big tech companies that want to get a piece of the hottest generative AI property in the world. And that's where regulators are having a hard time. They're worried about competition. They're worried about other companies getting access to this technology. They're worried about concentration. And this is where you're seeing it start to come unraveled, removing those board observer roles for both of those companies.
And even that might not be enough. Sources telling Bloomberg that, regulators here in the US will still look at Microsoft because they're like, you didn't notify us in advance about this deal. Bloomberg's Tom Giles, who leads our technology coverage around the world. Thank you so much. Sticking with big tech, we're also watching shares of Google and HubSpot. Google down, Alphabet, the parent company, of 2%, HubSpot up 0.9%. The reporting that Alphabet has shelved its interest in HubSpot, a story we've been tracking here across the newsroom. Caro, what's up next in the show?
Oh, a story that is beautifully written by none other than yourself. We're talking Rivian's race against Tesla. More on how the company is taking an alternative route to woo those Tesla customers. This is Bloomberg Technology.
It's time for Talking Tech, and first up, Leap Motors makes a deal to go global. Stellantis has partnered with the little-known Chinese EV maker, investing $1.6 billion for a 21% stake. The joint venture would allow Stellantis to access Leap Motors' advanced tech features, while allowing Leap Motors to build and sell their cars in Stellantis' global network. Plus, Lucid Motors says they're still continuing to raise cash. Bloomberg spoke with CEO Peter Rawlinson earlier today.
This is a capital-intensive business, and we do need to raise more money, and we will at opportune moments in time on the future. Our vision is to be a major player here.
The company has license deals with the likes of Aston Martin and said they're in discussions with others. And auto plants get a lifeline. The Biden administration's awarding $1.7 billion to retool at-risk or shuttered manufacturing and assembly plants across 8 states, converting them to support EV manufacturing. The funding's being made available through the Inflation Reduction Act and is subject to negotiations and other reviews before becoming final. Caro.
Look, we are going to stick on this EV train. Ed, yourself and Mr. Max Trafkin are out with a really in-depth piece on Rivian and VW's partnership, what sparked it, how the EV maker is basically banking on the anti-Tesla crowd. And Ed, just walk us through who you first spoke to. There's this particular, sort of person we hear from who sums up how a lot of Tesla people and owners feel right now.
Actually, we spoke to many of them. There's like this great body of former Tesla fans, fanboys, owners, that community online that's basically defected to Rivian for lots of reasons. And I think Max would agree, it's not very difficult to find them, is it, Max? This was one case study. We spoke to several of them. The point being that was Rivian's original audience. It's their audience now, and they got a lot to do, right?
Yeah, and what you see when you talk to a lot of Rivian owners, it's interesting because it tells you a lot about where the EV industry is going, and maybe also where Tesla is going, or where Tesla has at times gone wrong. It's not that these people are necessarily big Tesla haters. They're not the folks on X who are talking about shorting the stock or anything. They are just often just car people who are interested in EVs, much more interested in EVs, say, than in robotaxis or wild promises about brain implants or whatever. and also interested in new models. I mean, and when you look at where Tesla has arguably made some mistakes and where Rivian has done well, I mean, I think if Tesla comes out with a Cybertruck that looks something like the Rivian R1T, which is their pickup truck, I think it would have been a much more successful launch. And so it's an interesting sort of crossroads situation.
I really wanted to do this story, Caroline, because I've covered Rivian for many years, and I've never had an experience in my career where a company has gone from like such euphoric highs to like really down in the doldrums, right? This was the 6th biggest IPO in US history, the biggest since Facebook. And now the stock would make you think that it's like a Fisker or a Lucid, but to their credit, like Rivian's a different beast, Caro. They actually make EVs. What we wanted to do is explain how they're going to get to that next stage, which is to get nearer to Tesla.
I like that. They actually make EVs. And Max, to that point, though, they haven't been producing them at the rapid clip that many thought. And, well, they have got a new prototype that actually is just a prototype. When are we going to get the R3?
Yeah, you have sort of two situations going on. One is just that car manufacturing is difficult, and we've seen this with many of these automotive startups. It takes them longer than they want. Rivian also faced a lot of supply chain challenges, especially during the pandemic. The thing is with EVs, right, they're selling a lot of these very expensive SUVs and pickup trucks. They are getting really good reviews. But the truth is, and RJ Scaringe, the CEO of Rivian, spoke to Ed and I about this, but like there's just a limited number of people who want these things. What the industry needs and what climate advocates need is more affordable cars. And Rivian is trying to get there and get there as quickly as they can. We have they're working on the R2. The factory in Normal, Illinois, that's central Illinois, they're really starting to get ready already. When I was out there a few weeks ago, and the long-term plan is this R3, which is again this kind of like almost mythical at this point, cheap electric car, the electric car that everyone can afford. But it definitely is a long way from being real.
Well, it's also like they're running out of cash, and I think that one of the important points that we make in the story is some of the reasons why they pivoted to Illinois, right, Max? And that is they were running out of money, partly because, according to our sources, the DOE said if you want some of this money from the Inflation Reduction Act, you have to change your position on unions, and we understand that that's just not happening right now.
Yeah, you had this frantic scramble. I mean, the weird thing is Rivian, of course, has lots of cash. It's just that the automotive, that making cars is so expensive that they're burning even more. And it was looking, as we wrote in the story, increasingly unlikely that they were going to be able to open this plant in Georgia. Ed, as you said, looking to the Biden administration, to the federal government, like many companies, and ultimately not getting there. As we report in the story, these negotiations are ongoing. It's possible they will reach some sort of deal. But in the meantime, this VW infusion is huge for Rivian. It takes a lot of the pressure that this company is on. And of course, that's why the stock, went way up when the deal was announced.
And I love how we end on stock. We started on stock. And one of the greatest pieces that you have out of there is how the main owner of Tesla says there's two types of Tesla owners, those who are the stock owners and those who actually own the cars. All of this is such great reporting from both of you. Thank you, Max Chafkin and, of course, Ed Ludlow, just across the RJ Scaringe story. Coming up, well, we're going to be talking to Lin Chao, CEO of Fireworks AI, to discuss the future of AI and the company's plans following their most recent $52 million Series B funding round that really drives higher their valuation. This is Bloomberg Technology.
Okay, today for our AI in Action segment, we're joined by Lin Chao, who's the CEO of Fireworks AI, to discuss the company's latest Series B funding round, $52 million, but also their plans for the future of AI. So Fireworks is interesting to me, Lin, and welcome to the program. You describe yourselves as lightning-fast inference platform. So in the first instance, the basics of what a lightning-fast inference platform is.
Definitely. Thanks for having me here, Ed. In Fireworks, we have delivered one of the fastest and most cost-efficient inference engine using our proprietary technology. By that, we want to address the challenge of many applications, they require very low latency to drive responsive product experience and very low cost to deliver viable, sustainable business. And it's very difficult because large language models are big. So deliver all those requirements are really challenging. And here we focus on helping those applications to get there.
This is something that is targeted at both developers but also potentially enterprise customers. So if I were one of those two groups, a developer or running a large enterprise, how would I use Fireworks? Give me some examples or case studies.
Yeah, we have many customers ranging from leading startups to Fortune 500 companies using Fireworks to disrupt the status quo. And the startups using Fireworks to drive iterative, new creative ideas, and digital native companies using Fireworks to deliver new product experience. Fortune 500 companies use Fireworks to drive productivity. We have leading AI startups like Cresta, Cursor, SourceGraph, Liner.
Right. We're seeing some of your clients now. We're seeing actually some of your investors as well. I mean, this is a who's who of not just VC, but of strategic investors. NVIDIA's in, AMD's in, MongoDB is in, Lynn. How was the fundraising experience?
Yeah, we are blessed to be supported by so many, like the industry-leading investors of Sequoia. We also have investors from NVIDIA, AMD, and MongoDB joining force. We plan to use this funding to significantly invest in the following areas. Number one, to expand our inference offering and our ecosystem. To expand into the best and latest hardware provided by NVIDIA and AMD.
Right.
And build much tighter integration with vector database and database management systems, and starting with MongoDB strategic partnership.
We're actually looking at sort of how the system works a little bit right now. Just going back to your affordable, basically, generative AI production platform. That's basically what you are. You're a production platform. You're helping companies use generative AI. But what I like is the fact that you think that generative AI's future isn't in large language models, not these massive closed source ones, but actually think it's about open source models, smaller ones, finer tuned. What is the future of compound AI systems?
Right. So we started from a large language model because the large language models are very powerful and magical, but those single models are not sufficient. As we're surrounded by rich content, as we're having this interview and conversation, we actually use audio and the visual information. In Fireworks, we want to use the new funding to make a big shift towards a compound AI system that can orchestrate across multiple single models with various different modalities and non-AI tools to reach, for example, the latest news from Bloomberg or my personal calendars or personal to-do list, and build the totality of a great application experience.
I think it'd be really beneficial to our audience to explain how different it is building on an application specifically in the inference domain relative to the training process of a large language model. I think a lot of what Caroline and I have focused on in the last 2 years or so is everyone everywhere building large language models, or other words, training the model on specific data sets. So what's that experience been like for you as you've built Fireworks?
Right. So we are hyper-focused on inference for the following reasons. Because most of the Gen AI technology, they are going to power a consumer-facing or developer-facing application. And those application has a lot of users. And when you scale your product, that means you're going to quickly scale your business, and your inference costs will also quickly scale. So scalability, reliability, and maintaining very expensive models in production in a reliable way is very important. So we predict that market is going to create a huge amount of expense, and that's where the enterprise is leading into to solve inference problems.
Lynn Chao, CEO of Fireworks AI, on the latest funding round. We thank you for your time. Now, earlier at Bank of America Breakthrough Technology Dialogue, Bloomberg caught up with Bijal Sumaya, partner at Lightspeed Venture Partners, to discuss, AI and capital markets. Take a listen.
What we're obviously seeing, and I think we would have anticipated seeing, is API call pricing coming down. Now, I think the most dangerous, our perspective is perhaps the most dangerous perspective to have at times like this when technologies are changing so rapidly is to think that we know what the answer is going to be. We don't, right? But here's what we believe, which is that in a world in which the volume of calls expands exponentially, which we will see as more and more enterprises adopt generative AI. And now if you think about an agentic world, where each of us may have multiple agents operating on our behalf, and enterprises will have agents operating on their behalf, also making calls, well, then the volume of calls that are made on these foundation models is going to be absolutely massive, right? And so while the price per call may come down, the volume of calls will be extremely high, and we expect compute costs to decline. And so I would argue in that world, these companies at scale will absolutely be able to make a profit, right? But we don't know. These are things that we don't know, but I think it's dangerous to be too rigid with a particular point of view, and we're remaining open-minded about all of these possibilities.
Is there pressure that you put on some of these companies around monetization? Are you getting to that point where you're having those conversations? You need to start monetizing some of these products.
Well, look, I think these founding teams recognize, given the cost of compute and the capital intensity of these businesses, there's only two ways you can manage the capital intensity. One is you will keep raising capital. The other is you've got to earn revenue. And I think the answer will be both. You can't rely on the capital markets. The private markets have embraced these companies so far, right, with these companies raising billions of dollars, and most recently XAI raising close to $7 billion. So capital is available. But you can't assume that will always be the case. And I think we're beginning to see companies like OpenAI and Anthropic begin to scale revenue very fast.
Okay, interesting. In terms of the venture capital world and the structure within that sector, so Lightspeed's done something really interesting, which is looking at this continuation fund, so essentially allowing investors to take about $1 billion of stakes in your portfolio companies, so freeing up about $1 billion across the portfolio. It's a PE-style structure. What is the rationale behind that?
Yeah, the rationale behind that is that companies are staying private for longer. And at the same time, we want to be able to support those companies, yet recognize that some of our LPs that are investors in the funds that are invested in those companies, it's important to drive liquidity back to them. And so how do we solve both of those problems? Well, it is, for example, to take a set of what are still very healthy companies that are compounding in value and put them into what we call a continuation vehicle, where the underlying LP base may change, right? That provides liquidity to LPs that want it. Others may not, and they can roll over. And it enables Lightspeed to continue to steward those positions and continue to be a partner to those companies.
Coming up, we discuss AI in the brain, Syncron CEO, and how the company's brain-computer interface is using OpenAI's tech. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
Caroline Hyde, right here in New York. And Ed, we had some big macro data today. CPI cooling once again, that inflationary pressure dialing back. But it is not good news for stocks. Sure, money pours into the bond market as we start to anticipate, could it even be 3 rate cuts this year? But we're down 1.7% on the bigger benchmark, NASDAQ 100. Why? I mean, largely because we've got big tech selling off. NVIDIA, Apple, Alphabet, and who's who of the big tech candidates. Maybe we're seeing profit taking at this moment. Maybe you're questioning valuations. Just remember, New Street Research put out a note but yesterday saying maybe we do think that we're fully priced in at these levels for NVIDIA, for example. But move on to some of the individual movers. TSMC actually down almost 3.5%. This after they hit a new record. Remember, $1 trillion company, 8th biggest in the world. Their numbers showed 40% growth in the previous quarter. But once again, maybe we're seeing some profit taking for TSMC. Netflix, we've got earnings coming up. Citi getting a little cautious ahead of those numbers. Tesla off by 0.5%. It had almost an 11-day running streak. But Musk has more on his mind, it would seem, Ed, at the moment too.
Yeah, I mean, it's Musk all the time because of all of the companies that he's at the helm of. One of them, Musk's brain computer startup, Neuralink, aims to implant its device into a second human patient in about a week, and to have devices in a few more patients by the end of this year. That's all according to a video update we got from Elon Musk yesterday. Joining me on set in San Francisco is Bloomberg's Sarah McBride, who does a very good job of keeping across not just Neuralink chaos, but I would say brain implant-related technology stories. I mean, that's the news, right, that they say they're making progress towards a second patient.
Yeah.
But what else did you learn in the presentation?
Well, it was very interesting. When they implanted the first patient, it went wrong a little bit. Some of the threads started retracting from his brain. So to me, the most interesting thing was the steps they said they would take to mitigate for that. So one of the things they're going to do, for example, is implant the device more aligned with the curvature of the skull. And they're going to try to place the threads that drop down from that device in a more targeted way in the brain tissue, and they're going to implant them deeper.
This was kind of classic. It was classic Elon Musk related company stuff where he's like on X, the platform he owns, and saying, oh, by the way, we're going to go live in 5 minutes.
Right.
And he had this team of people in like a conference room.
Right.
Who were some of those people? I guess we're not as familiar with Neuralink as we might be with SpaceX and Tesla on those other important people around him.
Right. So he had a team of 4 execs with him. Sitting immediately to his right was Dr. Matthew McDougall, the chief surgeon at Neuralink, who kind of, I'd say, gave most of the updates. And to the right of him was DJ Seo, the president of Neuralink. He's recently been promoted to president. They also had the person in charge of software and also in charge of the brain implants devices themselves.
Sarah, there was the mixture, of course, of short-term, practical use cases of brain injury, spinal injuries, enabling people to use phones and computers. But then there's the long-term. And then there's the brash Elon coming front and center once again. What do you say? It's to mitigate the longer civilizational risk of AI. Can you articulate why he thinks Neuralink is the path for that?
Well, his idea is that AI could end up being a malevolent force, and so our brains will need augmenting to combat that. And if you put implants in our brains, we'll kind of have superhuman powers. He's talked about how we might be able to communicate wordlessly or just download languages, essentially, into our brains. And he thinks those types of superior functions will help us fight AI if we need to.
Sarah McBride on the latest. And in fact, we now want to talk about the fact that there are competitors in the space. Sarah McBride has just been writing about one, of course, when it comes to neurotech. And the Neuralink rival is Syncron, we're going to talk about. It's just announcing that it's actually partnering more with AI, tapping OpenAI's newest technology to really help paralyzed patients communicate by using their brain device. Here for more, Syncron CEO Tom Oxley. Tom, it's great to have you in the studio. And sometimes, I imagine, it feels as though Neuralink takes the oxygen out of the room when it comes to these neurotech devices. But you have got 10 patients using yours. And how is OpenAI's integration going to be helping them?
So the idea of a BCI is that you can help people who are paralyzed, who can't control their bodies, to express themselves. So the problem with paralysis is a lack of autonomy, and it's a problem in medicine that hasn't really got many treatment options. If you're paralyzed, you do rehab, and there's not many treatment options. So huge unmet need, massive potential for a large market to develop. So it's exciting. I think Elon focusing on this field is great. I'm not sure about that future vision around, the idea about fighting AI. I think there's a much more important shorter-term use case to help a massive medical need, and so we're very focused on applications that are going to improve patients' autonomy. And so when the ChatGPT 4.0, the multimodal GPT came out, we realized that this was a huge ability for patients who lack the ability to engage in the world to improve both inputs and outputs with the system.
How? Can you give us explanations of how GPT 4.0 is going to enable those that can't usually communicate, interact with what's happening around them in the room, for example?
So the multimodal, it takes inputs from text, from vision, and from audio. So multimodal inputs, and then it can use all that to generate prompts that enable the users In our case, we can use our hands to interact with prompts. In patients that are paralyzed, you can't engage with prompts. So we took the opportunity to build into a chat feature, which we've just released a demo of today, where the multimodal GPT generates a language prompt for our users. So that's the input. The output is the selection of the prompt to then generate a next action. But the BCI sits in the middle. The BCI sits in the middle. The BCI represents your ability to make a choice. And that's what you lose if you're paralyzed. You lose your ability to engage and make choices. You become dependent on other people. So the BCI is a digital representation of what you want to do. And the future of the link between BCI and AI is how the direct link from the brain to make selections with prompts lets you engage with the digital world.
Tom, it's good to see you again. Caro, Tom and I were on stage together a couple of months ago in San Francisco. And you were talking at that time about the progress that could be made with your different delivery system, right? So Neuralink is straight into the brain through the skull. You guys do this through the cardiovascular system. What has the LLM unlocked in terms of your cadence of putting it into the real world? You know, that was something I was fixated on with you when we were talking.
Yeah, so there are advantages. So there are really, we see two approaches of getting into the brain: cutting open the head and going in with cables, or coming in through a blood vessel using a stent-based procedure. And so that's how we're differentiated. We think this is going to be the natural solution in medicine. There's many examples of minimally invasive approaches scaling into market: stents, pacemakers, and critically, the infrastructure to deliver at scale already exists, and we think that's going to be the natural progression of this technology. The challenge is that we don't have as much information coming out of the brain. So the key has been, how can we use the information out of the brain to deliver navigate and select, which is basically how you control a platform. So we have a interaction method which delivers navigate and select. We're using that Apple iOS accessibility platform to deliver that, and now we're infusing LLMs such as multimodal ChatGPT to allow our users to make choices interacting with prompts in a way which is amazing. So Mark, one of our users in Pittsburgh, has been using this system, and we just released a demo today of how he's using it, and we're really excited about using, especially how OpenAI are going to be moving forward with their new programs. Bringing in video as an endpoint into their API is going to be very exciting for our patients, but that's going to be the future. AI for knowledge and selections, BCI for expression of intent.
This is beyond hard, complicated, and expensive. Are you looking to raise funds? Do you have a healthy pipeline of people interested in backing and expanding your project?
We're very lucky to have investors that we're excited about: Kozler and Arch Ventures and Bill Gates and Jeff Bezos. We have decent runway for a little while, but we'll be looking to raise shortly.
Syncron CEO Tom Oxley, thank you. Caroline, I want to bring you some breaking news from myself and Dana Hole. Tesla plans to delay the unveiling of its Robotaxi, or its Robotaxi Day, until October. You'll remember, Caroline, that it had been scheduled for August 8th, but what I'm hearing from sources and what Dana's heard from her sources is that they just want more prototypes. I'm actually also hearing that there's a bit of a rethink on the design, and that this has all kind of happened in the last 24 hours or so. It's an interesting development. I don't really know what to make of it, other than you see the stock there, Caro, moving down significantly. What does that tell you? Sudden
plunge that everyone had started to look at August the 8th. This was the fixation, wasn't it? When we got the delivery numbers that underwhelmed, the excuse coming from the street was that, no, but everyone wants to think about what August the 8th means. What's the longer-term vision, ultimately, of Tesla? Their share price run-up ahead of this headline, Ed, has been pretty phenomenal. Last 10 days, we've added $40 billion in market capitalization, and suddenly we sell off. What an amazing scoop that you've just brought us.
Well, I've asked Elon Musk what's going on. We've asked him to come on the program, to comment on the story, etc. The big picture here is really interesting, because the original thesis was, when you buy a vehicle from Tesla, it comes with all the hardware and software you need for self-driving. So when your lease ends, either Tesla takes the vehicle back from you and they put it into a fleet, or the middle ground was that you can opt in to put your EV from Tesla into the fleet, much like you might put your home on Airbnb. But the third iteration that was outlined to us at the AGM was that they want to also do a purpose-built robotaxi. So you'd have a combination of all three on what is a proprietary app, much like an Uber. The stock now down 4%. And I guess investors, to your point, are saying, well, this was supposed to be it. Like, we were going to learn what the plan is, and now we might be waiting a little longer.
And we can now bring in one Max Chafkin, who races back to set to be discussing that this was the fixation of so many, not the Tesla owners, but the TSLA owners. A lot of those that particularly believe in the long-term vision is about robotaxi vision.
Yeah, absolutely. And I mean, there were huge questions when Elon Musk said they were going to have this launch on August 8th. You know, there was, is it going to be an affordable car in the sense of a car you might want to buy? Is it going to be a robotaxi? Is it going to have a steering wheel? Lots of questions like that. And I think investors were sort of just going with it, right? Because Elon Musk, as we've talked about on this show many times, has a very good track record. And again, the reaction you're seeing from the stock is a reaction to the uncertainty. And if it's just a few months delay, probably no big deal. But I think there are real questions, profound questions about robotaxis and how real this is in the near term. And then on top of that, you have questions about Tesla's ability to market cars, right? Well, what does this mean for someone who just wants to buy an affordable electric car?
Max, I'm just looking at the Bloomberg terminal. A decline of 5.5% for what it's worth is putting Tesla on track for its biggest drop since April 30th, now down more than 6%. So investors are kind of looking at this. I also want to talk with you about the kind of academic approach to self-driving. So Tesla has a vision-based platform. It does not use LiDAR or radar. But Kara and I were talking while you were running down the stairs to set about the idea that initially this was, if you owned a Tesla, that Tesla would end up in a fleet, much like you put your home on Airbnb. And then, to our surprise, they go to a purpose-built robotaxi. So what do you make of the purpose-built robotaxi bit? And I guess the delay is in part a lack of information about that strategy?
I think there are probably a number of things going on here. I mean, as we know from previous reporting, there has been a lot of tension inside of Tesla over exactly how this should go. I mean, Elon Musk, as he personally has made clear, believes in robotaxis. I think there are many people inside of Tesla who like the idea as a vision, but are sort of more open to the skeptical arguments. The thing that I've thought all along, making this a somewhat unrealistic plan, is just that you have companies like Cruise and Waymo that have been working very hard and spending billions of dollars and making lots of, doing lots of work to negotiate with various local partners and so on. And they haven't gotten that far, right? Like Waymo doesn't have that many vehicles. It isn't in that many locations. It's going to be very hard for Elon Musk to just switch this on. And I think if you're talking about the trade-offs between a personal vehicle and a robotaxi vehicle, that creates an additional complication.
As we point out, he often doesn't get it in the timeline he says he will, but he often gets there in the end with those products. Max Chafkin, thank you so much. Coming up, we're going to be joined by PitchBook VC analyst Carl Stanford to break down the company's latest report into the health of the VC ecosystem. That's coming up next. There he is. This is Bloomberg Technology.
It's a European startup developing AI software for defense. It's just raised a rather mammoth $487 million. It plans to use this new funding to expand its presence in European nations bordering Russia. Ed, what are you looking at?
I'm looking at all the things a Bloomberg anchor is expected to look at, Caroline. Global inflation, interest rates, macro uncertainty, because they've all pulled down global VC deal making. But in the US, at least, it's not all doom and gloom, with deal activity increasing on a count basis for each of the past 3 quarters, a positive sign that deals are getting done. Let's break it all down with Carl Stanford, lead VC analyst at PitchBook. The data is so important, even if it's backward-looking, Kyle, because, we get a lot of the reporting each quarter about deals that are done, but then you see it in aggregate after the fact. Those 3 macro points, why in the US is there less pressure from them?
So I don't think that there is less pressure. When you actually dive deep into the data, what we're seeing now is companies coming back to market that haven't raised since 2021 or early 2022. And so the time that they spent, kind of kicking the can down the road for financing through layoffs, through slower growth, through extending their runway of their can, now they're coming back to market to raise. There's still a huge amount of dry powder in the U.S. as well. We're tracking about $295 billion in dry powder that needs to be put to work. So there is equity deals getting done, which is a positive sign from an interest standpoint. But many of those companies are just now coming back to market and kind of inflating the number of companies raising at the moment.
So they've white-knuckled it. They've managed to get through. How many of them have had to make themselves an AI-related play as well?
Well, we're seeing about 26% of deals being completed into AI companies, whether they are, true foundational models with LLMs or kind of vertical applications using OpenAI to do some sort of their business model. 50% of deal value as well. I think everything is pointing toward AI. If you're an LP, you want to get into an AI fund. If you're an investor, you want to get into an AI company. If you're a company, you want to somehow pivot to an AI business model. I think it's kind of the big talk of the market right now.
So we're showing US VC deal activity by quarter, backward looking and then 2Q. Extrapolate out about what you see for the rest of the year, Kyle.
Sure. The first thing I want to point out is that of that $55.6 billion, about $15 billion of it is from two deals: the CoreWeave, $8.5 billion deal, and then the OpenAI or XAI, $6 billion deal. Right. So that's really inflating the top line value. Where we see the rest of the year going is obviously going to be driven by any large deals that happen, but it's going to be continued to be relatively slow for the middle of the pack to the lower quality companies. I think what we're seeing now is high quality companies getting those deals done. If you look in the data, valuations look really high compared to really any year. But what is happening is those companies that raised on high valuations in the past are coming and raising again now. And if they're higher quality, it's boosting up that median value or pre-money valuation that we're seeing. It's not necessarily the market strength that it would actually portray from just looking at the data.
Kyle Stanford, always bringing us the latest and greatest in VC. We thank you from PitchBook. This is Bloomberg Technology.
President Biden is steadily losing support from a part of the country that knows image and stagecraft the best, Hollywood. Since the debate, heavy hitters including George Clooney, super agent Ari Emanuel, Netflix's Reed Hastings, and heiress Abigail Disney have all called on Biden to drop his re-election bid. Clooney is a lifelong Democrat who helped raise $30 million for the president at an event last month and said Democrats can pray for a miracle in November or they can speak the truth. Some in Hollywood are now even turning against media mogul Jeffrey Katzenberg, who serves as a co-chair of Biden's re-election campaign and is one of the president's top donors, who they say has intentionally shielded Biden's decline until now. Karen.
And on to the other candidate in the presidential race, Donald Trump. He's going to speak at Bitcoin 2024 conference. It's this month, and it's all according to the event's organizers. And it's going to be an address that would highlight, his growing embrace of the crypto industry. Let's discuss with Bloomberg's Sonali Basak. And we've got all of crypto Twitter talking that he's going to be at this event. And it does seem to be more and more of the Republican viewpoint that this is something to win on.
That has been a massive debate, and that is seemingly where things are coming off, especially when you've had such serious pushback here, not only from the Securities and Exchange Commission, but President Biden himself when it comes to certain aspects here. The Biden administration's approach to how legislation has been crossing the lines in Congress. And so remember, we're standing here at a moment where such little progress has been made on key stablecoin bills, for example, and there's a hope here that perhaps a change in an administration will really start to dilute some of the influence some of the stronger voiced anti-crypto members of Congress have had. Think Sherrod Brown, think Elizabeth Warren. The idea here that a more Republican president, but also more Republican lawmakers in Congress overall, will really start to cause a dent in how the industry has been approached in the last 4 years.
It tallies with the reporting that we had that Vivek Ramaswamy, Musk, Trump, and crypto was the common point for the Sonali Basak. Thank you. Good show, Karen.
What a thick and fast show. Great reporting on Rivian and Tesla. Great breaking news on Tesla from you as well. That does it for this edition of Bloomberg Technology.
Recap it all in the podcast. We missed a few shows this week, but we are back from New York and San Francisco. This is Bloomberg Technology.